Hi all, welcome to Elliott Wave News Channel by Wave Strategy Advisors. This is Ashish Kyal here, and we are going to discuss about what is the overall technical position of Nifty. We can clearly see that markets have been volatile over past 2 days post the RBI policy that we saw on Wednesday. Markets didn't react much, but yesterday there was a sell-off which was seen across the globe. It was led by probably the Chinese market, Shanghai, which was substantially down by more than 2%. Then even Hang Seng corrected sharply, and we also saw some kind of nervousness creeping in the commodity space. So there was a sign of nervousness yesterday across, and we clearly saw Nifty has been falling by more than 100 points in a single day after probably 7 or 8 days of session. So that was the movement until yesterday, but today again price reversed back sharply on the upside, and we have seen a rally of more than 100 points on the upside. So that has again retraced back yesterday's move on the upside. So during such kind of a movement where we see a sharp correction and again a sharp rally, what happens? The stocks that are weak continue to stay lower. So if you would have probably bought the stocks which were around the same levels when Nifty was around the same levels, those stocks have not done anything. These stocks have been probably just up by a few percentage points, maybe of 0.5 to 1%. And the rally is again limited to a few heavy weights, which has been helping the index to move higher. So this is a very typical or a peculiar behavior that we are witnessing in the past few weeks of the rally, because not everything is participating. There has been a handful of stocks which are heavyweights, which are leading the movement on the index on the broader basis. Even if you look at the small cap index has just shown a very minor BSE small cap index. If you can plot and check, you can also plot it on our website, wavestrategy.com, under the chart section. So if you plot and check that index, you will realize that there has been hardly any retracement which has happened on that index. So the overall structure looks like the rally is still on. There is no second thought about it, because we are seeing only a restricted fall. Even yesterday there was only a 1 day of correction that we saw. So from Nifty perspective, the rally is still on. However, from the broader market perspective, the top has been formed much earlier. It looks like that way. Also, with the rate hike ongoing, it seems that the bond prices have topped out already, and bonds are normally the first one to top out in a normal inflationary economic cycle, which we are currently seeing. However, equity markets looks like irrational currently. The price to earning ratio of the index is now quoting about 28 levels. I'm sure you might be aware 2008 was again around 28.20 or 28.30 odd levels, and we are again back towards that historic high PE valuations. There will be a lot of people who are now going to justify such high PE values based on PE re-rating, or there will be and numerous reasons why they will justify this outcome, because they are already bullish. So there is a tendency for people who are already bullish to talk and pick up anything and talk bullish, and whereas the opposite is true. When you are bearish, you'll pick up anything and talk bearish. Over here, we try to look at the charts, we try to look at various different parameters and try to understand what is the overall structure or the pattern, and what are the charts communicating. That is the most important aspect. So from the investment perspective, this is the market where one should avoid creating fresh long positions, because at such high P value, if there is a systematic collapse that happens, then whether even if very strong or good fundamental stock will not be in a position to probably sustain that up move. It's best to buy, if you want to buy something, it's best to buy only 10 or 20% of that stock right now. And when the correction happens, probably keep buying on the dip. That's the ideal strategy. I know you might be waiting for the correction, but on Nifty, even if the correction has not happened, on the stocks, the correction is indeed visible. And that's why it's important for you to pick up the stocks very genuinely. We are publishing a multi-bagger research report where we identify such kind of stocks that have exhibited an impulsive rise, whose P value is still under sanity. It has not gone to the insane levels like we are seeing on many of the stocks, and that is also exhibiting a good impulsive pattern as per Elliott wave or Neo wave structure. So we have been identifying such kind of stocks in the multi-bagger research report. Let's now move forward on to the charts of Nifty, and what do we look in the week ahead, what can be the probable trade setup. So if you look at this chart of Nifty, you can clearly see overall the trend has been positive. Yesterday we saw some very sharp correction on the downside, which actually took out this 20 period exponential moving average, which we use as a important short-term parameter for confirmation whether there is a weakness which is creeping in. At the same time, I have applied Bollinger Bands again, because whenever you see a sharp fall on the downside, again a sharp move on the upside, normally there is a tendency of a market to start consolidating or probably showing a distribution sign. So it's best to look at the Bollinger Bands. The resistance on the upside is now coming towards the zone of 11,380, 385, and the support on the downside is again towards yesterday's low of 11,240. So this kind of techniques, so you should know whenever there is a sharp gyration or sharp movement, it's best to apply this technique and try to look at what are the key resistance or support levels. So when the markets are in this kind of a consolidation, it is best to sell near the resistance and buy near the support zone. So that is the best strategy that you can adopt, unless and until we see a clear breakout from the range. So right now we can expect a range bound movement in the upcoming week. We can expect some consolidation to take place between the zone of 11,390, 400 on the upside, and the downside support coming towards the low of 11,240. So that is the zone where you can probably expect markets to consolidate. During this phase, it's best to buy the stocks that are outperforming and look for, say, shorting opportunities in the stocks that have failed to show any kind of meaningful retracement today. So that's the best way that you can look at. Now, since this is an Elliott wave channel, so let us understand the overall pattern that we are looking at. This entire rise from the lows of 10,600 looks like a corrective rise. What we can clearly see, something got completed here, probably in the form of wave A. We then have something completing here in the form of wave B. What we are right now seeing is a C wave, but this is also a corrective move on the upside. It's not an impulsive that I look at. So this is a corrective. So we already have a correction A, corrective B, and a corrective C. So there is a possibility we might be developing some kind of a triangle pattern, and extracting triangle pattern looks like a possibility, or we might be forming a diametric pattern. Now, since the time cycles are nearing in next 10 to 15 days, we are going to see time cycle lows to be in, and that's why. And so far, Nifty has just not formed a top yet. Forget about the lows. So we are not going to give too much of importance on the cycles, because the trend on the upside is still strong. We have yet to see a very strong decisive break and a sharp movement on the downside. So for the coming week, if you have to trade, the best strategy is to use buy on dips as of now. At the same time, if the support levels gets broken, you have to be very quick in changing the stand, because once the support breaks, it's going to be a very sharp reversal on the downside. So you need to be very quick if the support levels are taken out, in order to be out of the long positions and quickly go and add shorts. At the same time, it's best to avoid buying on the break on the upside, because then the markets are not going in just one direction. It goes up and then it again retraces back that up move to the extent of maybe 38.2 to 50%. So it's best to avoid buying on the breakout, but buy on dips can be the strategy. So any dips you see as a buying opportunity. But at the same time, again, I am repeating, any break of the support level below the Bollinger Bands shown here, 11,240 odd levels, can be indicating that there is a very big reversal which is happening. So you need to be very cautious. I am not going to be suggesting that you go short now. It completely depends on you, but it has to be based on some parameter which confirms that there is a reversal which is happening. We have already started seeing distribution on the stocks, many of the stocks, except a few which is helping the index to move higher. Bank Nifty is also shown some smart rally in today's session. But again, if you look at this Bank Nifty index, this is a daily chart. If you look at the hourly index, the high of Bank Nifty today is exactly at the Bollinger Band resistance. So Monday is going to be very crucial. If we see a gap up again and take out of the highs and Nifty sustains to close there, then yes, the tone will remain bullish. Otherwise, if we start seeing again nervousness on Monday and then again a move on the downside, then expect few days of sideways consolidation and then probably a reversal. So we are keeping a close tab in the upcoming week. That's going to be a very important week. and you should not miss out, because there is a possibility of a big trend emerging soon. So if we do not see any kind of a correction over next 10 to 12 days, then probably the rally is going to extend. So any movement on the downside, if it has to happen, it has to happen very soon, since the cycle lows are going to kick in just around say 12 or 14 days of time. And that's why it's very important, if you have to see markets correcting, it has to be sooner rather than later. And at the same time, from the chart, if you look at the price, there is no negative confirmation. So these are little conflicting signals. During such times, it's best to wait for the support levels to be taken out, and once that is taken out, you need to be quick in acting and taking the positions accordingly. The detailed trade setup and the strategy will be given in the daily morning research report, the financial waves short-term update. And in case you would like to pick up those kind of stocks that has the potential to give substantial returns over 1-2 years time perspective, you can subscribe to multi-bagger stocks. We have been recommending stocks like Dabur, which is substantially up by 18 to 20% in just less than 2 months of time. Tata Elxsi that I have talked about, and a lot of those stocks have sharply outperformed even in this kind of a market. Stay tuned. Visit wavestrategy.com for any kind of questions. You can post on the traders forum to plot. You can select the charts there and plot and see yourself very small cap index line. And I'll be more than happy to respond to any of the queries you might have. You can also contact us on helpdesk@wavestrategy.com, or call us on 99204 22202. Thank you. That's it from my side. Have a wonderful weekend. See you again, same time next week.